Today I am going to show you 5 incredible growth stocks that check all the most important boxes, because you need to find companies that not only grew in the past, but will continue to grow in the future. And on top of that, you want to make sure they are quality businesses with strong fundamentals. But before we dive in, let me quickly mention our sponsor for today's video, Provue.ai. We'll be using their powerful AI tools throughout this analysis to get deeper insights into management's outlook and future growth predictions for each company. And I'll share with you a special code that will give you the access to the platform for free. To find these top growth stocks, I'm using our Analysis Table Pro, but I'm not just looking for any growth stocks. I want the best of the best. First, I'll filter for companies with a growth score of 3 out of 3. That gives us 12 companies with exceptional growth metrics. But growth alone isn't enough. We also need quality businesses. So let's add another filter, financial health score of 2 or higher. Now we're down to companies that are both growing fast and are financially strong. Finally, let's sort these by past performance to see which ones have actually delivered results for shareholders. And there we have it, our top 5 growth stocks. So let's dive into each one of them. First up, we have Nvidia, and no surprise here given their dominance in AI chips. Let's open the company dashboard and look at financial health first. Return on invested capital is at 22.5%. That's excellent efficiency in generating returns. Net profit margin is an incredible 30.6%, showing strong pricing power. Share buybacks are at 2.9%. That is a bit of a problem. In the last 10 years, they were very slightly diluting shareholders. But in the last 2 or 3 years, they are actually buying back shares. And years to pay debt is just 0.1, basically zero debt concerns. Now let's look at growth metrics. Revenue growth is at 30.9%. That's great. Free cash flow growth is even better at 46.2%, and earnings per share growth is at 51.3%. Absolutely phenomenal. But numbers alone don't tell the whole story. We need perspective, and that's where Provue.ai comes in. Let's go to their playbooks section. Here we have US companies, so let's open that and let's choose Nvidia. Perfect. Here we have a number of their earnings call, but let's go to the newest one. So here we have all the most important data, and we also get 3 other really useful options. The actual presentation from the company, the actual earnings call that we can listen to, and a short podcast made by AI so we can easily understand all the most important things that were touched upon in the earnings call. But in this case, what we want to do is ask a specific question. What percentage growth is Nvidia's management predicting? And here's what we get. Revenue growth. Nvidia forecasts $54 billion in Q3 revenue, representing approximately 54% year-over-year growth. That is just crazy. Well, if they are right, it is going to be super impressive. Next up, we have Arista Networks, a leader in cloud networking solutions. Looking at their financial health, Return on invested capital is at 26.2%, even better than Nvidia. Net profit margin is at 32.6%, but share buybacks are at 45.5%. That is a concern. In the last 10 years, they issued a lot of shares. But if we look at, for example, the last 5 years, the difference is much smaller. And years to pay debt is 0. So that's perfect. Now for growth metrics. Revenue growth is at 28.2%. Free cash flow growth is at 41%, and earnings per share growth is at 39.3%. Absolutely beautiful. If we go to Provue, we can see that Arista Networks isn't in the playbooks yet, but that's actually not a huge problem. We go to Actions and we have a lot of helpful shortcuts here. So in this case, let's choose Earnings and we just replace the name of this company with Arista Networks. And that's it. We get all the information we need. Let's look at 2025 strategic targets. We see they want to get a 15 to 17% growth of the revenue. Very nice. Well, the future looks bright. Now for something a bit different. Kaspi, Kazakhstan's leading fintech ecosystem. Their financial health is absolutely stunning. Return on invested capital is at 40.6%. That's one of the highest I've ever seen. Net profit margin is at 51%, so that's incredible profitability. Share buybacks are at -1, so that is okay. And years to pay debt is just 0.2, essentially debt-free. Growth metrics are equally impressive. Revenue growth is at 38.2%. Free cash flow growth is at 41.8%, and earnings per share growth is at an explosive 59.2%. Let's do the same thing we did with Arista Networks in Provue, and here we have our results. Around 25% net income growth target maintained with strong finish planned for Q4. So they are continuing their growth trajectory. And we can find a lot of useful data here, but what I like to do is copy this data, go to Studio and generate a podcast or an audiobook that I can listen to, for example, in my car or while working in the garden.
Today, we unpacked Q3 of 2025 for Johnson & Johnson with a clear lens.
I can customize it with different languages or accents.
大内存路由器和 I 以太网架构
And even conversational tones from professional to humorous. So that's really useful stuff. Number 4 is Meta, the parent company of Facebook, Instagram, and WhatsApp. Return on invested capital is at 23.2%. Net profit margin is at 30.8%, showing their incredible ability to monetize their massive user base. Share buybacks are at -3.5%. Years to pay debt is 0.8. Very manageable debt levels. Growth metrics. Revenue growth is at 29.4%. Free cash flow growth is at 25.7%, and earnings per share growth is at 36%. So a very nice and steady growth. In the long term, it may be better than an explosive growth like Nvidia has currently. And since we get a prepared podcast about Meta, we can easily find what we are looking for down here. And here we have the latest results. Revenue was $47.5 billion, up 22% year over year. So it seems that Meta is showing strong continued growth in their core advertising business while also investing heavily in AI and the metaverse. And finally, we have Texas Pacific Land Corporation, a unique company that owns land and water rights in Texas. Their financial health is absolutely extraordinary. Return on invested capital is at 87.2%, the highest on the list by far. Net profit margin is at 64.2%. Incredible profitability, and share buybacks are at minus 10.9%. They are reducing share count significantly, so that is great. And years to pay debt is 0. Fantastic. It just doesn't get any better. And growth metrics? Revenue growth is at 30.5%, free cash flow growth is at 29.5%, and earnings per share growth is at 32.5%. All great results. But let's check the outlook for Texas Pacific Land Corporation using Provue. We can learn that even though the management avoids specific percentage targets, their commentary suggests production growth 10 to 15%, revenue growth 15 to 20%, cash flow growth double-digit growth, and water businesses 25 to 30% growth. So the growth will most probably start to slow down a bit, and such information can be a warning sign. That is exactly why it is so important not to just look at past performance, but also understand what management expects going forward. And using tools like Provue makes this process much faster and easier. So there you have it, 5 top growth stocks with incredible past performance, strong financial health, and most probably a bright future ahead of them. Now, if you would like to get access to Provue.ai yourself and explore all their super helpful features, then definitely use the link in the description and enter the code BALDIN to get a completely free access to their app. And if you found this video helpful, make sure to check out 5 incredible companies with no debt. Thanks for watching and see you in the next one.